Headlines are flashing about the return of risky debt products and whether it's a signal that credit markets are getting overheated. Markets reporter Sheila Dharmarajan has been looking into why investors shouldn't be too worried just yet.
You know, we're starting to see some signs of it. So we're seeing a lot of these headlines about risky debt products and whether that means that the credit markets are getting overheated back to those credit bubble days. So first of all, what are these risky debt products? Well, they basically refer to features that make it easier for borrowers to take on a lot more debt. So for example, covenant light. This is a feature where there are very few restrictions on the debt, making it easier for people to take on more debt. PIK, toggle. PIK is payment in kind. And this refers to when borrowers actually have the choice of whether they want to pay interest in cash or they can actually switch on a toggle which says you can actually pay this interest just by adding on more debt. So piling on more debt for this company. Now, these features always tend to set off red flags for investors because we saw a lot of it during the credit bubble. So for example, when you look at covenant light loans, 2007, almost $100 billion of covenant light loans were issued. And that's actually the highest level we've seen in 10 years. So a lot of these red flags are going off.
So you're also looking at volume and looking at that question whether we're seeing a comeback.
No, that's right. So a lot of the deals we have seen recently have some of these features, covenant light and PIK toggle, for example. But to put it in perspective, when you look at the amount of covenant light loans, for example, that were issued in 2009, only 2.4 billion. So I mean, when you look back to that 2007 level, we're less than 2.5% of that. So from a volume perspective, you know, we're still at pretty low levels right now. But we did talk to Wall Street deal makers to get their take on the subject. Marty Fritzen, he's from Fritzen Investment Advisors. He's not too worried yet. He said, look, we're still at pretty low levels. He's not very concerned about this. But he did point out, look, the door is open now. And as soon as that door opens, we might start to see an avalanche of these deals come. You know, we spoke to another banker who was actually quite cautious about this. He said, look, things are getting overdone. We're starting to see some more heat in this market, particularly as debt investors are looking for more yield. So they're willing to overlook a lot of these features. And, you know, so these are some trends to keep track of here.
All right, Sheila, thanks for the latest on the credit market story.